Hello everybody and welcome to Hawkeye FX with your host Marcus Toombs on the 26th of July 2017. Post FOMC tonight, where the rates were kept on hold, I just want to take a little look at the US dollar in this video. From the FOMC meeting minutes, two items have been picked up. The first is quite hawkish, as the central bank noted that the balance sheet normalization is to take place relatively soon, as opposed to the previous balance sheet normalization comment focusing on getting away by year end. Against this was a dovish comment, which the market reaction was dominated by the nuanced shift in inflation rhetoric, with the Fed now stating that inflation is running below 2%, which takes the pressure off and the next interest rate rise. Okay, if we look on the US dollar 5-minute charts, we can see that the US dollar weakened by over 100 pips against all of its 6 currency pairs here, and in doing so has taken out some major previous highs and lows, which I'll show you in this video. But before I do that, I just want to bring something else to your attention. This is way back from the 13th of April, and this was when President Trump jawboned the US dollar, saying it was very overvalued and this was having a detrimental effect on the US economy. Now, the big institutions would certainly have taken note of this, and there would have also been some arm twisting going on behind the scenes, and we shall see the impact of this on the dollar charts. Okay, let's start off looking at the euro, as I covered this yesterday, and we discussed in my blog yesterday that this was the previous high from 2015, and you see here in the FOMC aftermath we've taken out the previous high of 2015, and this opens up a lot of area above here. You'll note that this line here is when Donald Trump jawboned the currency. We have an accelerated period from that point. Looking at the pound now, which I've also covered in previous blogs, we've taken out the 1.31 level, having previously broken above the all-important 1.300 level, and you can see there's plenty of room for the upside. Again, this is the date that Donald Trump jawboned the currency, and you can see from in here that the price has accelerated away. Looking at the Canadian here on the monthly charts, you can see in today's move we've taken out the previous low from 2016 here, and this now opens up a lot of downside for this. Again, you'll note from Donald Trump's comments here in April that the price then started to fall significantly. Looking at the Aussie chart here, you can see for the last couple of years we've been in this consolidation range here between 0.7 and 0.78. And in today we've taken out the previous high from 2016 here. Again, you'll notice that from Donald Trump's comments here, this is the point at which we accelerated. And if I show you this on the daily charts, you can see here it corresponded with the pivot low and also a bounce on the 50% Fibonacci level. With the New Zealand next on the monthly charts, a very similar story here. You can see we've taken out the previous high from 2016 today, and also the point at which this turn in the market happened was from April here, when we had come down and bounced on this previous high from 2015. And finally we look at the Japanese on the monthly charts, and you see here the top of the range is 150 almost down to roughly 75. And you can see from the top to the bottom, the midpoint here is corresponding exactly where we are in today's price. If you look at the smaller range from 2015 to 2016 here, you'll see we've had a pullback also to this mid-range here. With Donald Trump's comments here, we haven't seen any further upside in this currency. We may see a lot of consolidation around this end. Okay, in all these charts you can see the US dollar has plenty of room for further weakness, and we shouldn't discount this currency weakening a lot further. Okay, I hope this helps, and I wish you all the best for your trading.